Hello all students. So I'm back with the next class of financial services. Okay, last class we have checked fee based and fund based financial services which are available. Okay, so today we'll go for the what are the different regulations are available in India related to financial services. Okay, before going further, that is which are the different regulatory bodies are available in India for your financial services, we have to understand why we need or why the need of regulators arises in India for the capital market. Okay, so we'll check. In the beginning of 1990s, liberalize, regulate and develop the country's financial sector by adopting best international practice has been initiated. Okay, so we moved towards the liberalization and thought that we have to go for some new type of different types of various types of financial services systems in the Indian market so that we can provide the better services. Okay, and then it encouraged the country to have one of the most vibrant and transparent capital market in terms of market efficiency, transparency and price discovery process. So whenever we used to have the varieties available, definitely we need the transparency so that we should not get somewhere cheated. Okay, and for the development of an efficient and healthy financial market, an effective regulatory mechanism required. Okay, so over the time demand increases and market got filled with the various financial instruments and services, and the government felt need to set up an authority to regulate the working of financial market players. So to regulate the financial market players and the working, we felt the need of regulatory bodies. Now we'll check one by one which are the regulatory bodies available in India. Okay, or before that also we have to go what actually the regulation means. Regulation refers to the control of commercial and corporate activities through system of rules and norms. Basic function of a regulator is to protect the interest of different categories of stakeholders with a class of financial institution or services. So regulation, not too much. Small things you can keep remember. Control of commercial and corporate activities through rules and norms. Okay. Why we need the regulations? To ensure financial market and financial services functions properly. Okay, to ensure that it should work properly and supervise and regulate the different financial institutions in various financial market. We have to supervise, we have to regulate so that they should work properly. Okay, now we'll go for the first regulatory body available in India, that is Ministry of Finance. Okay, so Ministry of Finance is the apex controlling authority of the Indian Revenue Services, Indian Economic Service, Indian Cost Accounts Service and Indian Civil Accounts Service. Okay, in Ministry of Finance we have a Department of Financial Services, okay, which covers bank, insurance and financial services provided by various government agencies and private corporation. So very first we have the Ministry of Finance who takes all the controlling, who take all the decisions related to the controlling various authorities who are involved in a financial market. Okay, next we have in this RBI. Okay, as we all know, RBI, Reserve Bank of India, apex monetary institution, Central Bank of India, established in 1935, nationalized in 1949. It has 19 regional offices, majorly in state capitals, and 9 sub offices. It is the issuer of Indian rupee. So dates you just need to by heart, you have to cram it. Okay, now what actually the functions or what actually the RBI do? RBI regulates the banking and financial system of the country by issuing broad guidelines and instructions. Okay, so as we all know, RBI used to regulate all the banking facilities, all the banking services in Indian financial market. Okay, RBI used to prepare monetary policy regulations and supervision of banking and non-banking financial institution also. Okay, and why RBI used to do these things? Because they try to maintain people's confidence in the banking and financial system. Okay, so banking related any financial services issues you have, you can resolve it very quickly, because RBI is having a various types of acts related to that. Some acts I have listed here, you can go through with this, like Government Securities Act 2006, Banking Regulation Act 1949, Factoring Regulation Act 2011. So some acts I have listed here, you can go for this. Okay, next we'll check next regulatory body, that is Sebi, Security Exchange Board of India, established in 1988 and got legal status in 1992. Okay, so what actually they do? They protect the interest of investors through proper education and guidance, okay, to stop the fraud in capital market. So time to time they used to provide you education and guidance if you are investors, so that you should not become the part of, or you should not face the problems, or you should not suffer with the frauds which are running in the capital market. Okay, and we can say that it acts as a watchdog for all the capital market participants. Okay, it ensures that three main participants of your financial market. Who are those? Those are issuer of securities, who used to issue the securities and collect fund from the investors. Okay, and the second is your investor itself, that is who used to invest their savings or their money, and the financial intermediaries, who are the agents or who are the connector between the issuer of securities and investor. So SEBI used to make sure that these three participants are working properly in the financial market. Okay, and SEBI is having a main three function. One is protective function. Okay, name itself used to tell you the meaning. One is protective function, another is regulatory function, and the another is development function. So regulate the functions of securities market to keep a check on malpractices and protect the investors. That is your SEBI main motive. Okay, we'll move to the next. That is your fourth regulatory body. That is your Insurance Regulatory and Development Authority of India, IRDAI. Okay, it's established in 1999 through an act passed by the Indian Parliament, and it regulates and promotes insurance business in India. Dates you have to by heart. Okay, the only mission of IRDAI is to regulate fair practices. Okay, to regulate fair practices in the insurance market to prevent loss of customers. So whoever used to get their life or non-life items insured, the IRDAI try to prevent their losses. Okay, IRDAI protect the interest of policy holders at the time of claims, issuance of the policy, and cancellation of the policy. So anytime, whether you are going to claim or whether you are going to issue the policy or whether you want to cancel the policy, at all the stages the IRDAI will protect your interest, protect the interest of customers, and regulate the rates and terms offered by the insurance companies to bring equality. Okay, to bring equality for the customers. Fine. So IRD is actually working for the protection of customers. It bounds the insurer with a minimum percentage to carry both life and non-life business. Okay, and try to resolve disputes of all kinds and speed up claim settlement. So all the work or all the protection for the customers. Okay. Next we have a regulatory body, that is Forward Market Commission of India. Okay. It established in 1953 under the Forward Contract Regulation Act 1952. Fine. So by hearting thing, we'll check what actually it used to do. So this commission allows commodity trading in 22 exchanges in India, now merged with Sebi. So now it is merged with the Sebi, but still working. So it governs the functions of the commodities market in India. Okay, it governs the functions of the commodity market in India. It collects and publish information concerning trading condition for different commodities. So it collect also and publish also information regarding your all the trading conditions on different commodities, so that any investor or any player or any active participants of this market can go through with those information and do the necessary required thing. Okay, as and when required, it cross check and inspect accounts also. Okay, so whenever required, they used to cross check and inspect the accounts also and other documents also of the registered association. So they try to keep again a control over the commodity market. Fine. Then we have the next regulatory body, that is Pension Fund Regulatory and Development Authority, which established in October 2003 by Government of India. Okay, so it develops and regulates the pension sector on in India. Pension sector, very broad sector. Okay, everybody thinks that after job or after my 60 years, how I will get the income or how I'll have the different sources of income. So for that, pensions are available, and that is regulated by your PFRDA. Okay, so it regulates national pension scheme and establish, develop and regulate pension funds to protect the interest of pension fund subscribers and settle disputes between intermediaries and subscribers. Okay, so it used to establish also, it used to develop also, and it used to regulate also pension funds. Okay, and protect the interest of your pension fund subscribers. And if any disputes arise between the intermediaries and subscribers, they used to check out those also. So these are your some of the regulatory bodies available in India. Thank you. Have a nice day.